And we're back here on the Real Estate Coffee Break. I'm John Adams, and I'm thrilled to introduce our very special guest, our own mortgage financing expert, Peter Burke. Hello, Peter. How are you, sir?
Hello, John. Hello, everyone out there. Happy Saturday to you.
You know, it's always a Saturday to me has always been a great day. And I usually work on Saturday, but it doesn't matter. Somehow it just has a magic ring to it. What can I say? I love Saturdays. The question comes up, Peter, that I want to deal with today. If someone is only going to save maybe 0.25%, is it worth the effort and the agony and the pain? Is there any agony? Is there pain and cost of refinancing? Because I know you've got clients that refinanced maybe a couple of years ago when rates were maybe only 1 or 2% higher. At what point is it no longer worth it? That's my question for you. So, folks, we're going to talk about it here in just a second, but my advice for you is to pick up the phone and call Peter at 678-557-9759. So, Peter, I hear experts on the network news, not me, of course, saying that refinancing is really not worth it unless you drop your interest rate by at least 0.5 point or at least 1%. What say you, sir?
You got to go through the analysis and look at what the savings are, what the costs are, what the overall interest differential that you're either going to save. And you said something, it's a pain. It's not really a pain for someone. It's a pain for me to analyze it, although I kind of enjoy it. In some instances, I can, when I say it doesn't make sense, it does. And sometimes it's the other way, but it's an exercise that's worthy of going through and then determining should you do it or not after looking at the numbers. Make it a decision driven by data as opposed to a decision that's more emotional.
Well, it well spoken, and it's interesting to me, having been through this with you several times. There's a lot of moving parts. This is not just are we going to save $10 a month for 12 months a year? I mean, there's so many different factors, and I would venture to say very few people are qualified to go through that entire process. But would you agree that refinancing for even 0.25 point, 0.25% for a lower rate would be worth it? And I've got 5 ifs here, okay? If, number one, you're switching from an adjustable rate mortgage to a fixed rate. Peter?
Absolutely, because it's going to continue to adjust, and it's possible we're in an era where for the next few years, when those adjustables hit their annual anniversary date, they will continue to go up. We've been blessed with probably the last 10 or 15 years where we haven't seen those adjustments, and the tables are turning here. I have an adjustable rate mortgage that I'm curious to see what the new rate will be in March to decide what I want to do, but I suspect it will increase.
Well, it's interesting to me. I have lived through the pandemic was I believe my 6th recession. As you know, I got into the business right after the Civil War, been active ever since. And I've seen interest rates go up and down, but all kidding aside, when I started, 30-year fixed rates were at 17%.
Yeah.
And we were selling loans with reverse amortization where the balance went up for the first 6 years, which was just crazy. And people had these massive payments. Today, we have gotten so spoiled. And I just think it's important to recognize, I don't think this is going to last indefinitely. I don't have a crystal ball, but the signs I'm hearing say that at some point we're going to have to get to some more traditional rate structures. You think that's right or wrong?
I believe so. I mean, everything you look at is increasing, and we're going to see long-term rates increase, and we're going to see those adjustables that are out there, whatever their index is, you're going to start to see them moving up.
Okay. That's number one. Refinancing might make sense if you currently have a large loan balance. Why is the size of the loan a factor? I mean, isn't a quarter of a percent a quarter of a percent?
It's a 1/4% on a $500,000 loan versus a 1/4% on a $100,000 loan. It's more interest.
Oh, it's 5 times as much. So the larger the loan, the more important the decision is. And do people even make 30-year loans under 100,000 anymore? Does anybody do that?
Yeah, we can. There isn't much of a demand, but if it came our way, yeah.
Okay, it's hard to believe. Anyway, the higher your current balance, the greater the benefit you will experience. So that makes sense to me. You might want to consider refinancing if, number 3, you can refinance to consolidate high interest debts. Peter, what are some examples?
Well, there's credit cards if you've got a balance on it. Automobile loans, if you bought a used car and financed it, you didn't get the manufacturer's 0.9, you got the bank 5.5% or something. So that may be it. And there's one that I overlooked that's not on there, but your home equity line of credit, which are tied to prime usually. And I haven't seen what prime is doing, but I suspect it's going up. And
that will remain an adjustable average, won't it?
Yeah, I mean, unlike an adjustable rate first mortgage where it changes once a year, an a HELOC is tied to prime as it changes.
Right.
There were periods where prime changed 2 or 3 times in 1 month over the last 20 years, 25 years. So yes, if you've got a home equity line of credit that you used to consolidate debt or to buy a car or to buy a boat or to put a roof on a house or to enclose, to finish your basement, look at what that balance is and be aware that it's variable rate interest.
Got it. And let's just look at a quick example here, and you can comment on it. Just assume somebody owes $500,000 at a 4.5% rate. The monthly P&I payment is $2,533. They may have private mortgage insurance on top of that, which would be an additional $250. Total monthly $2,783. If they call you and you refinance them at 4.25%, it's going to reduce the total monthly payment to $2,459, saving that person $324 a month. That is substantial.
And what's very interesting is you'd be surprised when you ask a borrower, hey, I need your latest monthly mortgage statement. And we look at it and say, do you know you've been paying PMI for the last 42 months? And they say, oh, yeah, but they don't know it. And that's a number that we can remove with a refinance because the value of the home has gone up. MGIC, Mortgage Guarantee Insurance Corp, will not drop PMI with a phone call. They only do it statutorily when you've hit 78% of the original value with the new loan. They're not in the business of canceling mortgage insurance and willy-nilly based on a phone call. You have to refinance to get rid of that PMI.
And it may very well be that may push you over the edge in terms of the benefit that you might
Yeah,
receive.
that's real savings. And it's kind of in that subcategory of PMI. Anyone who's got an FHA loan that they took out in the last few years, if your value has increased, you're still paying PMI, and there's another one to consider. FHA loans will have mortgage insurance essentially for as long as the loan is outstanding.
How about that? Interesting. All right, you might consider refinancing. It might be worthwhile if number 4, even if you pay closing costs, you may come out ahead in the long run. Peter, talk to us briefly about closing costs.
Well, I do say in the state of Georgia, compared to other states, there are reasonable closing costs as a percentage of the loan amount. I know we use 2% on this example, but even on a $500,000 loan on a refinance, your closing costs aren't going to be 2%. They will be less than that in the state of Georgia. But we use it because it's a simple number. 2% maybe on a $300,000 loan or a $200,000 loan makes sense. But they're typically added to the loan balance. So you're financing them over the term of the new loan. You can pay them in cash, although it's very rare, but those need to be considered as part of the overall analysis to see if you're saving money. But 2% is somewhat high on 500,000, but it's good for discussion purposes.
Well, and I also want people to understand that there are very real costs associated with the refinancing process. We're not just taking your current loan and changing a number at the courthouse. We're starting over, right?
Yeah, the governor wants his share. Your favorite closing attorney wants his share. The county courthouse, everybody wants their share.
Yep, absolutely. And I hear horror stories about some states in the Northeast that have a transfer tax of 1%, which is shocking to me. So
yeah,
we're very fortunate here that
we
this
are.
is line. Number 5, refinancing might make sense if, and this is more of just a commentary. Savings are highest on balances over $500,000. Peter, what has happened in the last 6 or 8 months that people need to know about?
Well, it happens every year, but this year is a big change. The conforming loan limit, which was $548,000, has been raised to $625,000. Conforming loans have good low rates as compared to jumbo loans. So if you have a jumbo loan today, you have a higher interest rate than a conforming loan. And since conforming loans are now bigger, you may want to consider refinancing that jumbo loan into a conforming loan, even if you refinanced in the last 12 months.
And that may also be the case, correct me if I'm wrong, if you have a jumbo loan that is larger than the 625, because you have told me you have found certain circumstances under which you can marry or pair a maximum conforming loan with a secondary loan that might not have the entire term and still come out ahead of the existing jumbo loan.
Yeah, some sort of piggyback, as we say it in the industry, but some sort of piggyback combination of a first and a second, breaking it up. Yeah.
I am so glad you're doing this instead of me, because I'm getting a headache just talking about it. As we say, Peter Burke is a brilliant mortgage transaction engineer. And my recommendation, folks, is pick up the phone, call him right now, 678-557-9759. Peter, thank you. That's my dog in the background, roaring approval for Peter Burke at Reliant Mortgage Solutions. Peter, thank you for all of your support, and thanks for being here.
Thank you, everybody. Have a great rest of your weekend. Thanks, John. See you next week.
All right, bye now.
Bye-bye.